Why the hell is the Bitcoin price going down? Bitcoin was at 66, then 69,000. Now it's dropped. Last night, everyone thought the world was ending. What the hell is going on? Why is that happening?
Yeah, a lot of this stuff, when you're thinking about Bitcoin, the Bitcoin market, a lot of this stuff on the shorter time frame is just driven by the leverage dynamics, a lot of the derivative stuff. So even, the most bullish kind of macro environment, we all kind of, know what's happening with inflation right now. The thesis of digital gold, of something that's absolutely scarce has never been stronger. But in the shorter time frames, you kind of get dislocations where people get a little too greedy, and Bitcoin takes the way of mass pain. So you're gonna see those over leveraged traders. You're gonna see them all get wiped out, and you're kind of seeing that. You saw that a little bit last night, this morning, and it's completely natural, right? It's the volatility is the price you pay for returns, and anybody that's over levered is going to get wiped out along the way.
And when you see this happening, do you get excited, or is this something that worries you? Do you think it'll continue to happen? Like, walk me through just what's going through your head as you're watching this all occur in the short term.
I mean, I'm excited as a Bitcoin holder, as a stacker. I set some limit orders at 60K that I was happy to get filled. So that's just, looking at the market every day when kind of the traders are levering up and price continues to sink down a little bit. I get excited because I know that, the strongest monetary asset in the world, in the history of the world, is going to be at a discount or most likely. So, I think in terms of years and decades, less so in terms of hours or days. And so, this sort of stuff, blood in the streets is something that excites me as a Bitcoin accumulator.
I love it. I love that you have just as much conviction as I do. All right, let's get to these charts. We got the aggregate futures open interest, and you've got a piece that is circled here in pink that says $26.4 billion. What are you looking at in this chart?
Yeah, so this is basically what we're talking about when we talk about derivatives. This is the open interest. So this is on both sides of the trade, long and short, how much money is directionally betting on the price of Bitcoin in the derivatives market. And so this is recently over the last couple of days when we were at 67, 68, we hit an all-time high there. And some people are saying, that's pretty bearish. We're looking kind of at this double top in the market. And I disagree for a couple of reasons. In dollar terms, we were at an all-time high. But if you go to the next slide there, the makeup of the derivatives market is actually a lot different than it was in April. We've been talking about this, brought it up, I think, on the last couple of times, but what you're looking at is the collateral that's being used to enter these contracts is a lot different. So there's a lot less Bitcoin margin. There's a lot less Bitcoin collateral that's in this futures open interest, which means that essentially, there's less likely to be these huge, massive drawdowns as traders get over leveraged. And 68 to 60K is not a massive drawdown. We're talking about the type of stuff we saw on in May or maybe March of 2020. Just the makeup of the derivatives market's a lot different. For instance, you saw BitMEX, I think last week, they said, hey, we have a Tether contract, Tether open interest. And so that has about $2 billion. And BitMEX is, kind of notoriously known as this Bitcoin only derivatives bucket shop. So just kind of the makeup of the market is a lot different. And under the surface, when you're just looking at the price, you may not see that.
So when you look at this specific chart, this percent open interest Bitcoin margin, we see from, let's call it March, April, all the way through, now, we continue to see that trending down. Now we're at about 45% or so. But you can see that the price is overlaid, and the price was tracking pretty much until August. And then that's when we saw the price shoot up. What do you think actually creates that divergence? Like, why was it tracking so well up until August? And then we get a divergence between the price in gray and the kind of yellow or gold there in that percent open interest of Bitcoin margin?
Yeah, so I think during bull markets, you see just, because of more of the accumulation, less of the derivatives, you see price really go parabolic, like we saw from, say, November of last year through April. And during that time, you see a lot of momentum traders, just a lot of natural greed and speculation in the market. You see traders looking to long their longs, looking to margin long Bitcoin to get more Bitcoin because, the thing's going up 500%. And so we kind of all saw that get washed out. And so over the course of, say, April, May, into the summer, you saw all of that Bitcoin margin, all of that Bitcoin collateral, as the price drew down 50, 55%, you saw all that get wiped out. And in the meantime, kind of, behind the scenes, you see this continued maturation and I would say maybe stable coin dollarization of crypto markets, which, some people think is bad. You see a lot of Tether FUD, but this isn't just Tether, it's Tether, USDC, a lot of other stablecoin competitors. And in terms of, the maturation, the financialization of Bitcoin, this is really good. This is bullish. The more kind of stable coins, the more kind of integration with the legacy system, and rather just instead of crypto collateral, where you kind of see this huge convexity and all these downside moves, that's a good thing. So you're continuing to see the aggregate amount of stable coins in this market continue to go up. And I think that's a trend that won't end anytime soon. So I kind of expect this chart to continue to go lower.